During the March 2020 COVID-19 crash, while global equity markets plunged, US Treasury bonds and gold surged. Investors flocked to these safe haven assets, which helped cushion losses for portfolios that included them. A balanced portfolio with even a modest allocation to treasuries or gold experienced significantly less drawdown and recovered faster than all equity portfolios. This demonstrated the value of having uncorrelated assets to hedge short-term risks. Hedging involves reducing the risk of adverse price movements by adding counterbalancing assets or instruments. In a long-term portfolio, the goal isn't to eliminate all risk, it's to limit short-term shocks that can force irrational decisions or liquidity issues. Market corrections or crashes, inflation or deflation shocks, geopolitical events or elections, interest rate spikes, currency depreciation for international investors. A. Government bonds, especially US Treasuries and German bonds, tend to rise when equities fall. B. Gold and precious metals, store of value during systemic crises, offer zero correlation with stocks. C. Volatility products, for example VIX ETFs, spike during market panic. Useful for tactical hedging. D. Put options or protected puts. Provide downside protection on specific holdings or indices. Useful for event-driven hedges. E. Currency hedging instruments. FX forwards or ETFs that hedge international exposure. One of the most effective forms of hedging is through thoughtful diversification. Equities from different regions. A mix of asset classes, bonds, real estate, commodities. Currency and sector diversification. This approach smooths out volatility and reduces reliance on timing-based protection strategies. Most hedging strategies come with a cost, for example, option premiums reduce returns. Overhedging can suppress long-term growth. Hedging should be strategic, not emotional. Best practice, use hedging sparingly during times of elevated risk or when nearing financial goals requiring capital preservation. Hedging isn't about fear, it's about preparedness. Combining passive diversification and active gold, bonds, options techniques builds resilience. In the next chapter, we'll dive into asset allocation frameworks and how to construct your personal mix of growth, income, and protection assets.